Greg Fewer, thank you so much for joining me. So let's start with the net income figure. Net income of 2 billion dirhams, that's down from last year. What's behind the fall?
Well, these are Aldar's fourth quarter year-end results. And as we do every year, we fair value our investment property portfolio. That's causing an adjustment of about 500 million dirhams that's running through the net income this year, reflecting about a 2% decline in our overall investment property portfolio value, which we think actually sits very good and very well against the wider market backdrop, which is seeing price declines of anywhere from 5 to 10%. And it really underscores the robustness and the quality of our portfolio in this market.
Well, talk to me about that wider market then, because that does suggest something of a soft market.
We are seeing elements of softness in it, but we have many more reasons to be bullish about what we're seeing in the market for this year. So going forward, in the development management business, we see strength. We see an undersupplied market in certain segments. We see a middle income market for our off-plan properties that is underserved. And we believe we're going to be selling more product into that market than we did last year.
So your underlying revenue is up more than 20%. What's driving that performance?
Yeah, that performance is really driven by growth in year-on-year revenues and profits from our core underlying development management business. Now, this is a very important franchise that we've built up over the years since we opened up the Abu Dhabi off-plan market in 2014. 3 years ago, we did 3 billion in sales in this market. 2 years ago, we did 3.5 billion. Last year, we did 3.5 billion. This is an important franchise that's generating consistently over 1 billion dirhams in gross profit. And that's really driving our underlying growth that we're seeing. And we can see more of that to come.
So what areas of focus are there for you going forward? Where do you see opportunities?
I mean, unquestionably, it's in the middle income sector. And what's great, again, about our business is that we've got such a large land bank that can be immediately activated to address underserved segments in the market. So middle income product, one-bed apartments well below 1 million dirhams, two-bed apartments in that 1.1, 1.2 million dirham price point. We think there's an insatiable appetite for that still in this market, and we plan to deliver on that in 2018.
You do have a pretty hefty cash stockpile. Do you have any plans to spend some of that?
Well, we definitely do. I mean, so turning to our asset management business, we had a strong 2017 with 1.6 billion dirhams of net operating income that we've hit, and we plan on growing that in 2017. And one of the ways we plan on growing that is we've increased our allocation of capital towards acquisitions. So we've guided in the past, we plan on growing that investment portfolio by about 3 billion dirham of capital being allocated to it. We want to grow that to 5. And we see good opportunities in the market, and those opportunities are highlighted by the fourth quarter closing. We bought a very important building, International Tower, for about 658 million dirhams. We see more of those kind of opportunities in the market, and we've allocated capital accordingly. So
is the Emirates' biggest property deal of the year just the start for you?
We think there are other opportunities out there. We're positioning to take advantage of them, and we hope to close more in the coming year.
So you're also raising the dividend from 11 to 12 fils. Why not raise that more, given that your share price has been moving sideways in recent months?
Yeah. We think that strikes a good balance between rewarding our shareholders for the performance that we've had and reserving some capital for growth. And we see both of those are important. On the dividend, we're updating our dividend policy this year. This is one area we've really led from the front in the markets here, where we've got a clear dividend policy on the asset management business. We've updated that this year. We're going to be paying 20 to 40% of all our cash profit from our development management business to shareholders as a dividend. Both of those have driven this increase for this year to recommended 12 fils level, which represents about a 9% growth in the dividend.
Can we get some color on the residential market and what occupancy has been like specifically?
Occupancy has been pretty firm. I mean, we've got a great portfolio, 5,000 residential units in quality developments that we've built around Abu Dhabi over the years. So that's over 90%, outperforming, we believe, the wider market. And on the off-plan side, like I said, we see growth. We see undersupplied market in the middle income area, and we plan on delivering toward that market in 2018.
It feels like when you look at Abu Dhabi's property market on the whole, you have two competing themes over the past year. On the one hand, you have the opening of the Louvre, which has boosted tourism. On the other hand, you have geopolitical tensions throughout the region, such as the Qatar blockade. What impact have you seen from either of those two developments?
Well, we've seen a lot of impact on it from the leisure side. So I think, with the Louvre opening, I mean, that's a part of a broader Abu Dhabi strategy to really start to cater to a world-class leisure scene with a world-class leisure infrastructure. The Louvre is opened on Saadiyat. Warner Brothers is opening in our backyard on Yas Island in 2018. When you stand back and look at the quality of this leisure infrastructure, it really stands out globally. And we like that. We think that's going to be driving more tourists into the region, be staying at our hotels, and be visiting our malls.
And any impact from those geopolitical tensions?
Not that we've seen.
We've discussed the middle market play a little bit already, but how much more potential do you see there, and how much of a focus is that going to be for you going into 2018?
Yeah, the middle income segment's a big focus for us. We believe it's underserved still. Every time we launch a building, we sell it out. We think that there's tremendous demand in the market, both on Shams at Reem Island, where we have a strong land bank for this, and also at Yas. Again, this destination focus that we plan on building on to really enhance resident experiences and take advantage of infrastructure that's already in place.
All right, Greg, thank you very much.
Thank you.